Alright, so this is CryptoKingJAY back with another video, and let's start this one off right. Just want to let you know that I am not a financial advisor. I am not giving anyone financial advice. I do personally invest in Bitcoin, Ripple, Ethereum, Litecoin, and a bunch of other cryptocurrencies. Everything you hear on this channel is for entertainment purposes only. And I just want you to know that when investing, you have the potential to lose everything. So with that in mind, let's get into the news. Let's get into this video. Today we're going to talk about my favorite topic, which is the institutional money. The crypto whales, the big boys. You got to see what they're doing. I mean, if you are investing, which, hey, I'm not telling you to invest. I'm not telling you not to invest. But if you are, you should be following the big boys. At least that's what I'm going to do. So let's get into, I got 3 articles pulled up. 2 of them I want to actually go through the entire one. So this might be, a solid 10-minute video. We'll see. But so this article, this is on bitcoinist.com. I will leave the links in the description to all the articles I go through below. So let's just get into it. So new data shows Grayscale Fund quietly buying Bitcoin now controls 1% of supply. So while 2018 continues to be a challenging year for cryptocurrencies, some big money players are taking advantage of lower prices to increase their virtual currency holdings. According to Dyer, Grayscale Bitcoin Investment Trust now holds over 200,000 Bitcoin for its institutional investor clientele, with 17.4 million Bitcoin currently in circulation. This means that Grayscale's Bitcoin investors now own about 1% of the circulating supply. So think about that, guys. 1% of all the Bitcoin owned is owned by this one, institutional investors clientele. That's massive. That's big money. That's the whales. They're in the market. And if the whales are in the market, you better believe that they know what they're doing. So the figure also puts Grayscale at the top of the institutional Bitcoin investment arena. Despite the year-long bear market, it appears that the firm established by Digital Currency Group in 2013 continues to add to its Bitcoin position on a monthly basis. GBTC earns a 2% annual fee on investor holdings, so it makes sense to see the company helping investors double down on their Bitcoin holdings. And that's another point I want to touch on, is that what everybody needs to understand is that, most of the institutions, they're buying it up because they believe in it. But the fact of the matter is that their clients, they believe in it. And the institutions, at the end of the day, what they believe in is money. They believe in making money. However, whatever way that is, whatever investment, stocks, Forex, whatever that they can get their clients money into, they make a kickback on every dollar that they trade for their clients, that they invest for their clients. So, honestly, do they really give a shit if their clients lose money on Bitcoin? No, but they're still getting the money in. And the people that got in before them, you're going to profit. So another aspect to increase Bitcoin stakes might come from the fact that GBTC trades at a premium. According to the company's website, it charges a 22% premium on Bitcoin over the cryptocurrency market's Bitcoin price. So, if Bitcoin's trading for $100, they're charging their clients $122. Simple. While Grayscale's Bitcoin ownership rises, the opposite is the case for the value of the trust's asset under management, AUM. The firm's AUM now stands at about $826 million, which is its lowest point in 2018. Apart from Grayscale, other institutional investors also seem to be expanding their Bitcoin stakes. Back in mid-November, when the first wave of price drops occurred, Maddie Greenspan reported that eToro clients marginally increased their holdings. And if you see the tweet by Mr. Greenspan, you can see right here where he's highlighting, like it looks like a small uptick in the price, but a small uptick is a lot when we're talking about millions of dollars. So Ethereum whales are also buying to hodl, hold on for dear life. The accumulation of major cryptocurrencies isn't limited to Bitcoin, however. According to Dyer, also, Ethereum whales, i.e., big money investors with low time preference, have acquired more Ether in 2018 than any other year in cryptocurrency's history. Like in the case of GBTC, these investors own a significant portion of the total circulating supply of Ether, about 20 million Ethereum, or 20% of total Ethereum in circulation. So think about that. They own 1% of Bitcoin and they own 20% of Ethereum, which are, 1 in 3 on the top, 10 cryptocurrency by market cap right now. And we're going to go into the Ripple in a second. So I also wanted to just touch on this article by the chairman of the New York Stock Exchange because it kind of just puts all of this into perspective. So Jeff Sprecher, chairman of the New York Stock Exchange, stated his belief in the future existence of Bitcoin and cryptocurrencies. So following yesterday's news that Alliance's chief economic advisor is vouching for the longevity of Bitcoin, New York Stock Exchange chairman Sprecher has stepped in to back him up at the same conference, no less. So just think about that in itself. Why are they both at the same conference? Both at the same cryptocurrency conference? Simple. So Sprecher made this statement at the Consensus Conference when answering a question regarding the 80% Bitcoin price drop from last year's highs. He instead referred to the larger question of critics regarding the future survival of digital assets. After stating that the answer to this question was unequivocally yes, he added, "As an exchange operator, it is not our objective to opine on prices." He did go on to say he likened it to the Dow Jones Index, which is not a great representation of the economy, but is still the most used indicator. He said, "Oftentimes in finance, it's not about the best. It turns out to be about the broadest, the most commonly accepted, and for whatever reason, Bitcoin has become that." So on that point, that quote alone, I just want to touch on the fact that I've been saying this for a while. If you've watched my past videos, I've been saying, in my opinion, Ripple XRP is the best digital asset ever created. It's the best digital asset ever created. But if you go ask the everyday, person, the average Joe, what is cryptocurrency? The first thing they're going to say is, "Oh, you're talking about Bitcoin?" Not knowing that cryptocurrency is a whole, thousand of coin market. But the most widely known, the most commonly accepted is Bitcoin. So vested interests. And this is another key point. Of course, Sprecher is also CEO of the New York Stock Exchange parent company, Intercontinental Exchanges, ICE. And if you guys watched my previous video, I've already touched on ICE. ICE are key investors in the much anticipated Bach Bitcoin futures platform. And Sprecher is married to the CEO of Bach. So think about that. The husband of the New York Stock Exchange CEO is married to a future Bitcoin futures trading platform. Why would that even be a thing if he didn't know, if his wife didn't know, and if all his, buddies, that are multi-millionaires didn't know that Bitcoin is about to take off? It's simple, in my opinion. So now let's go into the Bitcoin news because the crypto whales have been snatching up XRP as well. So this article by the Crypto Daily Gazette, crypto whales moved about 1 billion in XRP while Ripple launches Xcurrent 4.0. So according to Whale Alert on Twitter, if you guys aren't following Whale Alert, you probably should if you're interested in XRP at least. According to Whale Alert on Twitter, nearly $1 billion worth of XRP have been transferred within a 4-hour span. It also seems that the entire amount was split between 5 transactions. The largest transaction was 999 million XRP, worth $350 million. According to reports, the top three transactions all went to the same address, which now holds 2.6 billion XRP. It looks like a number of transactions seem to be Ripple itself moving some of its massive XRP holdings. As you all know, Ripple owns 60% of the total supply, and the vast majority of that amount is locked in escrow. Ripple usually sells its XRP over the counter. Over the counter meaning that they're selling it directly to an institutional investor or an institution itself. Just a little while ago, the company announced that it managed to double its XRP sales in the third quarter of 2018, and it sold a total of $163.33 million worth of XRP compared to $73.5 million from the second quarter of this year. So within a 4-month span, when the market was going down, going terribly down because the average person was selling thinking that, oh, I lost all my investment, now I'm just going to sell it and cut my losses. The big boys, they were doubling down on their investments. Literally, they were doubling down. They more than doubled down within a 4-month span. And why is that? Because they know, they can see where this market's going. So that is pretty much all I have for this video. Like I said, I'm going to leave the links to all the articles I went through down below. And I just want to finish off by saying, guys, it's simple. Follow the big money, follow their plays, copy their plays. When it comes to investing, a lot of times it's just about, seeing what's working and copying it. Simple as that. When you're going to go make something new, usually when there's a new invention or product on the market, it's really just they swiped something from somebody else, they improved on it themselves, and then they deployed it. So follow the whales, follow the big money, and you're sure to do well if you do decide to invest, which of course I'm not telling you to do. So this is CryptoKingJAY, and I'm out.